So Nvidia released their earnings and wow, a lot of price movement. I was impressed with how much they grew. I was impressed with their cash flow, and the market is reacting in a negative way so far. Not sure where the stock's going to trade tomorrow, but so far the stock is not doing great. So let's take a look at Nvidia. I'm going to do a full analysis of the stock. I'm going to take you through looking at the financials they released, putting them into my valuation schedule, and seeing where I think Nvidia should be from a valuation perspective. So let's go through this and check it out. So overall, if you attended the stock's earnings call for Nvidia, man, was that fun. That was really fun to see how the stock landed. And overall, man, that was just a lot of fun. I ended up being slightly in the money. I don't know how you guys fared, but I think I made like $9.60, which was fun. And I'll be sure to enjoy, I don't know, a cheeseburger or something with it. So let's go over the earnings, and would love to hear from the attendees. I think there's about 8 people online so far. What did you think of the earnings? Just your reaction. Good, okay, bad. Just that would be the category where earnings good, bad, or what'd you think? And I'll put that in the chat. Love to see how you guys weigh in on that. At first glance, I looked at the earnings and thought to myself that they were good. But let's take a close look. What I was impressed with is 30 billion in revenue. And that's up 15%. Now, this I think is what scared investors. Only 15% from Q1. So sequential growth. And I'm sorry, I'm like not sharing a very big image here. All right, that's a little better. All right, let's start over so you guys could read it. So that revenue number really impressed me, 30 billion of sales just in the quarter. That puts them at over $120 billion in revenue for the full year. Now, sequentially, 15%, that's a pretty low number. I think that's probably creating a little heartache where investors are like, what? You're not going to keep having this explosive growth? If you compare the same quarter to the year before, 122%. Again, I thought that they would come in at around 100% growth. Growing at 122% is very good. Data center growth, that's where it's at. So 16% sequential. So if you follow sequential and let's say go forward a year or two, if you're only growing at 16%, I think that's what might be leading to investors feeling like, hey, I got to get out of this thing before it turns into an $80 stock, before it turns into a $60 stock. This sucker is really cranked up. This is priced to perfection. Plus, they want, just it's once you detach a stock from its valuation based on numbers, financials with a projection. Hey, where's where I think the stock's going to be? Or excuse me, here's where I think the company's going to be from a revenue standpoint, profit, free cash flow. Once we lose connection to that type of analysis, anything goes. Hey, you can start selling Nvidia stock for $20,000 a share. It will get there if people are willing to buy it. But if some big investors leave this stock, it's going to really crater because other stocks that have been in this zone have done so. And we'll see if it happens. Back to the earnings. So I think those numbers are probably the numbers that are catching a lot of attention. I thought earnings per share were fine. I do think that they had a bunch of announcements like right before the earnings, which I think created some noise. It was almost like they wanted to create a lot of positive vibes like, oh yeah, we got this announcement, we got that announcement. Well, what's the sense of doing that? Everybody's waiting for your earnings. You're already like the Super Bowl of the day. Just announce your earnings. Why create that noise? I think they were probably feeling a little unsure of themselves as they went into the earnings. They're shipping out Blackwell, with it, which is their next generation platform. Now they're shipping it for samples, okay, but not ready for production. You do not want a moment. You don't want a CrowdStrike moment where they ship out Blackwell, they start catching on fire, they start having a bunch of problems, because then you'll really see the stock price crater. So they got to be careful. You know, you're a $3 trillion company. Okay, your valuation is extreme. So any mistakes could cost you $1 trillion of value, and that's where they find themselves. They bought back shares. Okay, that's fine. That's a good thing. But if you're in this growth mode where you're growing, 122%, I actually think it's a negative to see them say, oh yeah, we're going to buy $1 billion of shares. Well, why? If you can grow your business at 100% for a while, you're going to need that cash. You might need it to pre-buy materials, hire more engineers, do whatever needs to be done to grow the business. Returning capital to shareholders, nobody cares if you're going to buy back some shares. At this point, you're in growth mode. You don't buy back shares if you're in growth mode, and feel confident that next quarter and the quarter after that, you're going to deliver some awesome growth. So I thought that was a moment of weakness for this stock. All right, so looking at revenue again, very impressive. But these numbers are going to keep getting bigger, folks. So this is the Q3 number compared to the Q2 number compared to last year's Q2. If we look at the Q3 number, things get a little harder because Q3 is 18. Law of big numbers. The bigger the numbers, the harder they are to compare. So you compare it against 13.5, right? 13.5 billion. Next quarter, you're going to compare against 18, and then 22, and then 26. And pretty soon that growth rate is going to go 200, 100, 50, 30, and it's going to look like a normal stock. And then investors might say, why is this looking like a normal stock, but we're paying like it's going to revolutionize the world and it's going to do all these awesome things? And maybe they lose $1 trillion of value very quickly. Maybe. So revenue's there. Their compares are going to get a little harder. Their outlook, they're going to do 32 billion. They told us they're going to do 32 billion. So when we look at their Q3 revenue, we can do a quick calculation, and the revenue for Q3 is 18. So going from 18 to 32 is 14. That means their growth, divide 18 into 14, and we are at, I think, a little south of 80%. Let me use this thing they call a spreadsheet. So divided by 18 equals 77% growth. So how's the market putting its head around, okay, the growth of this company was astronomical. Oh man, Nvidia's awesome. And now you reported 122. Market was like, oh, okay. And now it's going to go to 77. And then after that, the number keeps getting bigger. So that's going to go to 50, 45-ish. Then it's going to go to 30-ish. And I think that's where the slippery slope gets really slippery for Nvidia. It's down 7% in after hours trading. Okay, so let's keep moving on this earnings report. Data center growth up sequentially 16%. This should be exploding. If I believe all the press, it's like, man, why is it slowing down? And I believe that semiconductors are cyclical. You buy a computer and you use it for years. You buy a GPU, you use it for years. So once you have data centers built out, they're probably going to use that capacity for some time. And Nvidia may see a lull, a decrease in revenue. That happens, whew, stock's going to crumble. The other things, this is where they started. This is their original business. And they're putting an AI PC in there. Yay, 9% growth. Cool. So what is good is they provided full financials. Good job, Nvidia. They have lots of cash. Great job, Nvidia. And that's a lot of cash after they bought back shares. And they have very little debt. Excellent work, Nvidia. They gave us cash flow, and they actually produced more cash flow than I expected. They have $29.8 billion of cash from operations, and they bought $1.3 billion of the CapEx. So they net about $28.5 billion. Looks like I have a Oliver, I should have taken your advice, Victor. Bought Nvidia calls. You can't win them all, buddy. And who knows? I first impressions, and I mean, I was on the live stream with the Stonks team, and I looked at the earnings, and I'm like, wow, that looks really good to me. And here we are. So we'll see how this plays out. This is a interesting. To say this is an interesting stock is to say there's water in the Pacific Ocean. This is a stock that really is the superstar of the decade and will continue to be so. But thanks for watching, Oliver. Appreciate it. And I appreciate you building an awesome platform to do streaming. I'm having a blast. I'm meeting new investors. I was on earlier with, the guys who do crypto, Alpha something. And I'm sorry, I'm tired. Been up since 4:30 Pacific. And I had a blast. And they actually let me join their stream. I did a stream this morning. Had a blast with the investors. Let's make this one a positive one, guys. I'd love to see more comments and let me know what you think of Nvidia, what you think is going to happen to this stock. And what I'm going to do is I'm going to just do a live stream to review their earnings. I'm going to record a video to cover my short position in detail. And then release that as a video. I think that's a little better in video. Okay, so let's keep rolling here. So their cash flow is excellent. So what I'm going to do is I've updated my valuation schedule. I think I covered the basics on that. And I created this spreadsheet. It's created on the principle of valuing companies based on free cash flow. I think you've heard me say this, but I'm going to say it again. The reason why Nvidia, the reason why Apple, Microsoft, Google, and so forth are worth so much money is this cash flow. Nvidia produced $29.8 billion, and hopefully you can see, and I'm sorry, this is kind of an eye chart, but it's basically $28.5 billion of free cash flow for the first half of their current fiscal year. Multiply that times 2 to establish what I think they're going to do in free cash flow. The growth rate is going to be about 20%. Sequentially, they're growing at 16%. So I want you to know that this is actually a very optimistic growth rate. I would not go that high, but what I'm trying to do is just prove to myself that I'm just not being pessimistic because I think they're too pricey. I actually want to lean the other way and say, let me prove to myself that Nvidia is worth that stock price. So instead, I go a little higher in growth. So the first 4 years, and I do not believe they're going to produce all this cash, but I'm going to project it. Getting up to 98.4 billion is very, very tough, and they are in a cyclical industry. Now we're talking about terminal value, all cash flows beyond that. I'm going to go with 4%, which is very reasonable. I've used that for like Microsoft and Apple. When I take the net present value using a low discount rate of 8%, I get $1.99 trillion of value from those cash flows. I add the cash that they have on their balance sheet and take away debt to get to $2 trillion of value. The only problem is, and this is my estimation of after that, and I think I decreased it by 6%. If I take their current published market cap minus 6%, I get to 2.966 trillion. So there's about $1 trillion of value in there that's unexplained. Why is it there? It's the cash flow doesn't support it. So it's 36% priced too high. It's priced at a premium. We look at earnings per share. I use a PE of 36, growth rate of 10%, and I get to $110 per share. Shares were trading at $128 per share. I think it moved down a little bit, but I can't chase the stock all the time. I have to set it at some point. And that's priced at a premium of 14%. Overall, even after, and I'm using the aftermarket trading price. I'm not using the before price. Let me make sure that is the case. No, I'm using the wrong stock price, 116.80 cents. Let me update that. Correction, I am using the wrong number. So it brings down, since the stock price is lower, the discount on cash flows is 30%. You could substantiate the stock price using earnings per share, but I still think it's priced too high by 22%. I think if I used my valuation, I mean, I think it's a $91 stock. The stock market thinks it's $116 at this moment. We'll see what happens tomorrow. It may rally. It may go up. We'll see. I've got a short position, and before trading ended, I was probably losing 9%. Um, Let me see if I could show that. So Nvidia, I have to update the price. So it was 116.80. So now I am crazy. I'm down 1%. What I what I did is, so yesterday we saw that on the Stonks website, the votes on the stocks that were being traded, it's kind of a useful tool. When we look at Stonks and to see people voting, it was actually pretty good at telling us what the stock price, if it was going to go up or down on, see right here, if you read this data, and are we already on Dell? Maybe, but the example being, I read this for Nvidia, and it was like over 20,000 votes or predictions on Nvidia, and it was at like 64, 66, and I'm like, man, that's a lot of bulls. So I actually reduced my short position a little bit on Nvidia. I took it from having $9,000 at risk to having I decremented it by about $1,100. So I was down to, I don't know, 8,900. Now after this price decrease, it's I'm close to even, which is interesting. We'll see how it plays out. Now, the reason I shorted the stock is, part of it is, I do the analysis, I see the stock, I believe it's overpriced. It should be priced at, maybe 80 to $95, and that's at best. I could see the stock going down to $60, $70 a share. Now, it's one thing to think it and kind of like ignore it for a while, but why put all the effort into analysis and then not believe it, right? Now, if I'm wrong and this thing rallies and it goes up 40%, I'm going to close the position, and stock market's going to charge me a big price for a lesson, which is you didn't understand Nvidia correctly. Therefore, I'm going to charge you whatever money I would lose, a couple $1,000. But I think this has been a really interesting run. I started shorting Nvidia in May. So it's not like I woke up today and said, hey, let me short Nvidia. And I did a video at the end of May. I think it was May 29th was the day that I shorted it and recorded it. And I got a lot of comments and a lot of hate mail, I guess, of people, emotionally saying, oh, I'm out of my mind. And I admitted, hey, I could be wrong. Nobody's wrong at this moment, by the way. We're all making decisions on our investments, looking at risk and making those decisions. Time will tell us who's right or wrong. Time will tell us who's going to make money, who's going to lose money. And at the end of the day, Nvidia may prove to be a winner or a loser for me. I may eat a lot of crow and have to tell everybody, this is how I lost 35% on my short position with Nvidia. And I commit to doing that. Or I'll close it out. And like I closed out recently, a big gain on super microcomputer. I have multiple videos on my channel. Those have been viewed quite a bit today. Imagine that. And I closed that position, I don't know, 2 weeks ago. And it was a winner, 52% gain. And boy, I would have gained more today because it went down substantially. But I thought that was enough, and I closed it out. CrowdStrike was another stock that I shorted. I did not believe in their revenue growth. It was priced for perfection plus some fairy tale premium, and boom, I made some money on CrowdStrike, and that one was a 10-day short position and netted a 42% return. I wish I could do that over and over again, but shorting stocks is super risky, as it is with any of my videos or live streams. I provide no financial advice. I never recommend you buy, hold, or sell any stock that I talk about. I'm just purely talking about my experience and my opinions. Virus. Best way for someone holding share and wants to hold through earnings, I guess, ER, is just pick up a few puts to hedge, in your opinion. Yeah, that's definitely the case. I don't do that. I respect people that do that. I think there's a lot of people that want the safety of that. That's definitely something you can do. But I'm a long-term investor in most cases, even with those short positions. I mean, I expect that I'll keep this thing open for a year, for as long as I think it's still the same story that I believe in. If Nvidia tomorrow announces that, hey, we have this new business and it's going to double our size, I'd probably be closing the position immediately. Or if there's other reasons for me to say, hey, this position's really working, I might add capital to it. So good suggestion there. And I would love to see a video or a live stream on how you can use puts to really reduce risk. That'd be really interesting. I don't do that. I don't know that I'd ever do that because, managing risk for me is through diversification. It's through doing my homework, analyzing companies and saying, in this case here, over time, I believe Nvidia is going to have too much gravity and it's going to be pulled down to $80 a share, $90 a share. And it could be even worse. I've cited examples on my videos where Cisco is probably the best example. That stock cratered and it went well below its intrinsic value. The reason for it is once you get that downward momentum, it's very hard to stop it. You have a lot of automated trading where they have algorithms where there's stop losses. And once you start hitting those, boy, the stock can really go down fast. Ask the people at Super Microcomputer today. It dropped more than 20%. It was down 23% at one point. I think it recovered some of its loss and it ended a little less than 20% down. But that was a severe down day. All right, so we've gone over the valuation. What am I going to do next with Nvidia? So I think this story that I believe is still intact. This is a great company making the best accelerated computing GPUs, hands down. Brilliant people work at Nvidia. All the employees at Nvidia, my hat is off to you. You guys created an awesome company. So my short position, I don't short a lot of stocks. It's not saying that Nvidia is not a great company. I'm just saying it's not worth $3 trillion. I think it's worth more like 1 trillion to 1.5 trillion, which is still an awesome company. It's still massive. Berkshire Hathaway took them 50 years to get to $1 trillion of valuation. Nvidia got there in 2 years. So good for them. So that's the announcement. Let's see if there's anything else that's interesting about Nvidia that I wanted to mention. So there is a tidbit of information that I would say one of the hyperscalers that I cover is this tiny little hyperscaler. Let me see here. Acer 8. Okay. I think I'm done buying WTO. I don't know what WTO is. I'm 3,000 shares in. All right. So WTO. I don't know what WTO is. Is that a symbol? Okay, I think I'm done. Am I looking at the right company there? I'll look at it. I'll analyze it. You just got to get me on the right track. Yeah, there we go. Okay. I'm going to look at it. Let me finish my thought, and then we're going to analyze that sucker. Okay. So what was I talking about? So a hyperscaler that is a hyperscaler, I started buying into their stock. I listened to their earnings call, and they cited something that I thought was an interesting bit of information. They said in their conference call, hey, we're Bit Digital. We use GPUs from Nvidia, and we've been using them for a long time because they started mining Bitcoin with GPUs from Nvidia 10 years ago, and they're very good at it. More recently, they started providing service or infrastructure to companies that need accelerated computing to build large language models. And they have a couple of flagship customers. That business is off the ground. And they said that historically getting GPUs from Nvidia, there's been a long lead time. But right now, there isn't. It's a 4 to 6 week lead time. So it's very easy to order those. And that really caught my attention, which is if their customers are now not standing in line waiting for GPUs, I can only imagine the demand is going to continue to go down. And the growth rate is going to continue to go down as well. So that's my story on Nvidia. It's a story I've been telling since May. So what are we here? Late August. So we're 3 months into, this story that I've been following or, citing. And you can check out my analysis. It's on multiple videos on my channel. And this is just one more reference point that I'm seeing on Nvidia. All right. So We've got a request. U-Time Limited. And these guys, together with the subs, developer, manufacturer, sells, operates mobile phones, accessories related to consumer electronics. Okay. So these guys are doing, let me take a look at their website. So do they do a consumer product, and it's a lot of electronics, like, speakers and accessories that we put on our desks? Boy, their little website doesn't come up very quickly. Come on now. Jeez. So, yep. I can't get to their website. Pardon the wait time. I'm waiting for their little website to start. I guess we can move on without that. So these guys are a Chinese company. This is the Chinese yuan. I'm sure I'm not pronouncing it right. And that's, I think, 7.17 yuan. $0.17 equal 1 yuan. So we'll have to convert that. All right. So financially, let's take a look. So I'm seeing red. Red means they're bleeding their revenue. That's not good. That's not a sign of a healthy business. So that's annual. And then they do semi-annual, which is kind of normal. Some areas like Europe, if you buy European stocks, they might do semi-annual reporting. We got 26% growth in the most recent quarter. And then we've got negative in first half of 24, second half of 23. And they're citing, I guess they have a fiscal year that ends on March 31st. That's what I'm picking up from their financials. Okay, so their growth is not very good. I think it's suspect. It's a risk. They are burning cash. Not good. You're burning $377 million of cash. Your balance sheet. Now I'm going to point something out in a minute. So you have 77 million. This is all yuan, okay? So it's actually 77 times 0.17. We would get to a dollar amount, but we can just look at growth rates for now. And total debt is about the same amount as their cash, okay? So you're burning a lot of cash. You got enough cash to pay for your debt right now, which isn't too bad. That's not a lot of debt. Good. And they're burning cash. Now, when you're in this business where you have, hardware devices, the exception is Apple or maybe Samsung, where there's an iPhone and there's a good margin on that. Even with the iPhone, Apple doesn't make their big margin on the phone. They have kind of a small margin. They make it on the services within the Apple store where people download apps and stuff. That's where they make 85% margins, is when they charge, an app developer to put their app on the iStore, and then people use it, and then Apple makes all that big margin. Or in the case of Google pays them some crazy amount, like 25 billion for it to be the default search engine on iOS. So interesting. But when we look at these guys, we're going to see that revenue is 172, cost of revenue 163. Their gross margin is tiny. It's like 5%. This is not a desirable business. Desirable businesses, this should be 80, 75. Nvidia, we just moved off of it, but I could go back to Nvidia very quickly. And this is a desirable business here. Cost of revenue, gross profit. They had 60 billion of that is profit. Divide 60 billion by 8, you're up to high 70s, 77, 78 margin. This is a desirable business. This isn't. You see the big difference? That margin really makes a big difference. Margin equals more free cash flow, more profit, more ability to grow your company. So this is a very undesirable business that's in trouble. Now their stock price is really, really down. Whoa, look at that. It went up and then it crashed. Oh my God. Oh man. I don't know what to say here. I do not touch stocks like these because events like this happen. And it looks like it is just cratered. Incredible. I have not seen this before, but um, the fundamentals are terrible, and it looks like this one's. Holy smokes, amazing! All right, so let's see here. They're diversifying bought into Medfield. Yeah, I wouldn't touch this. I wouldn't touch this at all. Once you get into this zone, nobody wants to buy it other than people that think, "Hey, I can probably make a short-term gain." That's not my investing approach. My investing approach is look at it, a company, expect that that's going to double over the next couple of years, buy into that company. Or you see like I did Nvidia, it's way overpriced. Do my analysis over time. I think the stock's going to go down and then I'll make money over time. But it's never a, hey, I'm going to make this amount of money by the end of the month situation. So Pinduoduo, let's take a look at PDD and then Acer 8. Yeah, good luck with that company, man. You only throw this money you would gamble. Yeah, so I'm gonna make a quick comment on Virus's comment there. Okay, cool. And then I'm gonna get to Pinduoduo. So let me open up Pinduoduo so I don't forget. So on investments, right? Yeah, like maybe I don't know if you're referring to that company we just looked at. I mean, if you're gonna, I'm not a big gambler. I'm not. The closest I come to is betting on a pretty good football game. Just throw a few bucks on the Super Bowl and that's about it. And the reason for it is that my favorite, to me, I guess you can use two words interchangeably: gamble and take risk taking, right? And I am a risk taker. When I shorted Nvidia, that's definitely a risk. But I really have what I think is an advantage, which is out of 10 investments, if I do my homework, I'm probably going to do well with 7. Probably going to have a couple like home runs and then a bunch of singles and doubles. And now I'm on the negative side, I'm probably going to have a couple bad strikeouts. Like, man, this one did not work. I just did not read the situation correctly. But I would say that, I hate using the word gamble when we invest because I guess speaking for myself, I put a lot of effort into analyzing companies and kind of trying to get to fundamentals that I think can tell me, about the company. And then I make an investment and I try to judge on risk and then I follow it through. I know a lot of people feel that the stock market is a gamble. And I would share to somebody that was in my family or a close friend, if they felt that way, I would say, yeah, if you don't do your homework and you just bet on a stock, it's absolutely a gamble. It's like, hey, who's going to be in the Super Bowl this coming season, right? It'd probably be a good bet if you said the Chiefs. Oh, they're the best team. They were the best team last year. Patrick Mahomes is coming back. They're loaded. Coach is still there. Okay, that's fine. That's a calculated kind of bet, right? So anyway, enough of that. Pinduoduo, these guys announced recently, and they are kind of going down. What's going on? These guys are in China. I own Alibaba, and I have looked at Pinduoduo over the last couple of years. If we look at the 1-year chart, they're up 10%, but boy, the stock really cranked up. Man, at one point, stockholders are like, yeah, baby, I am up on this position. Come on, Google. Man, Google is not working for me today. What's going on? They got to buy more Nvidia GPUs. And they were up, investors were up more than 70% if you measure the 1 year. And then all of a sudden, this is really cratered, especially recently. Now, Pinduoduo, their fundamentals are okay. Their growth rate, I think, is decelerating. Growth isn't as good as it used to be. So really high growth, and it's decelerating. But why? I mean, that's great growth. It's in the Chinese currency. We looked at this one, I think, on the live stream with the Stonks team on Monday, and it did crater after earnings. EBITDA looks good. balance sheet. This is the Chinese currency. You got to multiply times 17. I'm not going to do that. We could just kind of look at trends, right? It's growing. So that's very good. Let's look at debt. So no debt, really. Okay. So they got lots of cash. They're growing their business and cash flow. Cash flow looks pretty good. So 44 times 0.7. It's $7.5 billion of free cash flow. This is a high growth company, but it's in China. So the best I could do is give you like free cash flow times 10 plus cash. So I could probably do a valuation and get this to like 90 billion in value. So I think it's overpriced. And here's the thing about Chinese stocks. I could tell you as a BABA stockholder, I have a little over $30,000 of BABA stock. It hasn't really moved. I have that stock at a discount because it is discounted. But the investing community around the world, just if the company is located in China, substantial discount. It's just the way it is. I can't tell you why the market does it. I could just tell you the fundamentals. If you're in China, you're going to take an additional discount on your shares. So PDD would be a pass. It's been a pass. I think when I look at the fundamentals of BABA, they look better. Let's take a quick look to tell you what I'm talking about. So Alibaba is the biggest, this is the Amazon of China. And over the last 5 years, Charlie Munger really believed in these guys. They were a $300 stock. And then ever since then, boom, it's really come down. But market, their revenue, and is this in dollars? Let's see. We will soon find out. So this is in the Chinese currency. So, okay, so they converted it for us here, but this is in the Chinese currency. Their growth rate is lower because they have these massive numbers. You multiply this times 0.17, and we're at like 150 billion in revenue in dollars. And it's still growing, which is good. When you look at Amazon, that's about how much they're growing. So this is a pretty big operation. Back to that gross profit, right? Cost of revenue, 590. Gross profit, 360. That's pretty damn good. That's a lot of gross profit. And we look at free cash, these guys produce good free cash. So 127 times 17 would be roughly 17 plus 5 or so. So that'd be like 22 billion. 22 billion times 10 is about $220 billion in value. Plus they have cash. So I value these guys at like 250, 275. And for a while, I thought, China's economy is growing faster than the US. So I thought it'd be a good bet. I simultaneously owned Amazon. Amazon was a great success for me. And I'm going to tell you both a good story and a bad story. I'm going to tell you how I did it right and how I did it wrong, all in the same story. All right. So the stock market said, hey, Amazon is a terrible business, so bad that we're going to discount it by 54%. Rational minds, and I put myself in that category, said, stock market, you're out of your mind. I will buy a lot of Amazon because, you guys are out of your mind. So I bought as much as I could, as fast as I could. And the stock rose. And it rose really nicely. So at like around this point in time, and I think I sold right here, and then it had this pullback, and I'm like, oh man, I'm a genius. So I sold the stock at around here, and I took a big gain. Wonderful. I had room in my tax situation where I could take it. And I kind of felt a little like, you know what, you're making a mistake. And I sold it at a gain. And I just regretted it. I'm like, you knucklehead, you should still have Amazon stock. So then the stock market decided that Amazon, after its earnings, it was going to discount it by 14%. And that was my chance. And I've been buying Amazon hand over fist every time it has any kind of pullback. Buy. And so the moral of my story is buy great companies and keep them. These companies, there's not a lot of them. There's only one Amazon. Nobody even comes close to second place. There's only one Meta. There's only one Google. There's only one Microsoft. If you have your hands on it, keep it, unless it's grossly overpriced. And when I sold Amazon, I thought it was a little overpriced, but not a lot. And I kind of wish I would have kept it. I think I left, at the time when I sold Amazon, I think I had like $80,000 of the stock. So if I would have kept it, I would have probably made another 20,000 from there. So that's a $20,000 price tag on that lesson that the stock market taught me, that there's only one Amazon. When I look at companies, and I don't have it readily available, I have this quadrant where I show a very desirable zone. It's companies that have these really strong barriers of entry, that the companies are so good, nobody else can compete against them. Amazon is definitely one of those companies that has a huge moat. Competitors, let's face it, Walmart's the best competitor that they can match up against, and Amazon will run circles around Walmart. And they have the AWS business. It's a phenomenal company. So I'm talking about Pinduoduo. These guys have to operate competing against these guys. I think these guys are stronger. So I'm not buying this one. And I think it's overpriced. This one has not moved to my satisfaction. At the same time, Amazon's just been a very, very good stock. I did not make enough money on it. I made a mistake and sold it. Now I'm rebuying it as fast as I can. And that's what I'm doing with Amazon. So, all right. So I meant to talk about Nvidia, and you guys want to talk about other stuff. That's cool. That's cool. Angry Buddha. Let's see some of these handles. Thanks so much for viewing, guys. We got 40 people. Acer8, thank you so much for joining. Virus, thank you for joining. Angry Buddha. Gambling are games of chance where the odds are known. This isn't that. You are correct. Stonkiali. Hey, what's up, man? Acer8. And we got Dieter. So, all right, guys. So I covered Nvidia. I figured I'd keep it short and sweet. I'm going to stream tomorrow morning. If you guys want to talk about the market, it'll be interesting to see where Nvidia is trading in the morning. Right now, it's still trading down 6.74%. We'll see if it comes off the mat and punches the stock market in the face and says, F you, man, we're going up. We'll see. We'll see what happens. I see family in here. Hey, Virus. Cool. All right. Pyro. Hey, I do a weighted DCA on those big allocation every month. Money goes into the account, but total allocation gets used based on trend. I agree with that. So some people have kind of like very systematic way of investing. I get that. It depends on what you want to do, right? If you want to be completely hands off, you can buy some ETFs, completely hands off. Cool. That's not who I am. I used to be in some ETFs, but as I become more and more active, for the last 5 years, I really haven't owned any ETFs at all. I try to use, like, the market, right, it doesn't go up or down in a straight line. And we'll look at the NASDAQ. So the NASDAQ has these severe pullbacks, right? Now, here we go. So leading up to this pullback, if you watch my streams and my videos, I'm like, hey, man, this is great. This is great. This is wonderful, but I'm getting nervous. This market's getting more and more expensive. And I was selling off positions, especially the weak ones. And I created more cash. I ended up being at 12 or 14% cash, which is a high cash position for me. And boom, we had a correction. So it gave me a lot of capital to invest. So I think I do dollar cost averaging, but I'm active. I'm not like, hey, I'm just going to buy on every Tuesday or something like that. I try to use momentum of the market in my favor and against it. Like when it was going up and this run we had, some of my stocks I thought were overpriced, and some of the companies that I felt like were not, like Amazon and so forth, I kind of pulled back on those and really what I think is I strengthened my portfolio, and I'm glad I did so. Right now, I'm probably sitting on 9% cash, maybe 8% cash. It was interesting to see how the market just really cranked up. I can probably see this better on the monthly. And the NASDAQ really picked up and went, and it was down more than 10% in that trough. So it was kind of cool. You know, um, I know a lot of you guys are technical traders and you guys trade on trends and stuff. And I'd really, I'm going to start sitting in on some of your sessions because I understand trends. And I think I can learn something from you guys. I could probably pick up on trends a little better if I listen and learn. I don't want to give up on my, investing psych, philosophy and strategy. It works, man. I make a lot of money each year, and I think I'm just going to keep doubling my portfolio, less than every 5 years, or I should say, at least every 5 years. And I'm good. I'm good, man. It's kind of like I have the cheat codes to having more money than my family's going to need, and that's cool with me. But I think I can learn from you guys, and I'm going to start like Trader Prad. What's up, man? I snuck into some streams today. Did I sneak into yours? I know I sneak into yours all the time. And I got into another stream. It was the guy that we rated after the main session for the Nvidia. And then I been attending the guy who streams about crypto. That guy's money. Okay. When it comes to crypto, I've been investing since 2018, but I'm not like, what's most intuitive to me is, scrubbing through financials and kind of getting to evaluations and stuff. And crypto, I believe in, but it's not a major part of my portfolio. It's maybe less than 10%. It's probably like, if I include real estate, it's like 3-4%, right? And I'm asking him questions on that stream, and the dude's just dealing really good information. It was like a master's class on crypto. So, man, this stock site is going to be awesome because I hope to do the same thing with you technical traders, man. I'm going to get my head around how you guys do it. I understand it conceptually, but I think there's some nuances there that you guys use and utilize. And thank you in advance for the lessons. I'm going to start attending them. So we'll see how it goes. All right, guys. So I'm going to keep it a little short and sweet. I want to do the Nvidia stream. I'll be back 6 a.m. 6 a.m. Pacific tomorrow, which is 9 a.m. Eastern. I'm in Cali. And we'll stream at that point. We can talk again about Nvidia. We can talk about the market. I'm going to be curious to see what is the futures market looking like. Okay, it's looking a little red. And it's probably Nvidia being in here. Ooh, it's a little more red. I better stop looking at it. But it'll be an interesting opening tomorrow. Please attend if you can. And I'll be attending your streams throughout the day. But it's bye for now. Thanks for attending, everyone. Really appreciate it. Have a good night.